Here's your stock market review for today. Stock market basically kind of moving sideways. Overnight, pushing a little bit higher. Things looked like they might have gotten a little bit interesting with a sell-off there, but then the stock market rallied towards the end of the day. Unlike what it did yesterday, a bunch of people stepping in, buying on the dips. In the meantime, US dollar index looks like it is about to implode and shoot downward. I have a chart on that. And gold looks like it wants to skyrocket. A technician would look at this and say, to the moon. Let's break down what's happening in the stock market review. I'll show you the charts I've got. Let's jump in. If you're just finding my channel for the first time, thanks so much. Make sure to hit the like and follow button. I do a stock market review every day. What I do is I break down the main indicators for the stock market and show how the stock market is performing. Today we got initial claims, which comes in every Thursday. This is something I've been kind of really paying attention to. We've really been slowing down on initial claims, very benign, to the point where it's possible the Federal Reserve might not be even hitting a soft landing, but instead merely a flyby. Here is continuing claims. These are things that I've been kind of glued in on, because if we see the employment situation kind of deteriorate a little bit, that's good news on the inflation front. So here you're looking at the blue is continuing claims. It's a bar chart there, kind of sideways action, not really moving much higher. Maybe we're okay with inflation in this regard, but the real thing that I've been paying attention to mostly is housing prices, because if they move up, 70% of the inflation we have been looking at came from housing. So if continuing claims don't really climb too much, that's not going to really help out the inflation picture. So maybe it's a 1-2 jab that might take the economy down a little bit, because the Federal Reserve might be forced to do something. In the green line there is a percentage of those. This is those on continuing claims versus the individuals who are the total working pool. And as you can see, kind of moving sideways as well. So that came out this morning, and really not a whole lot there. We did see GDP got revised downward, but that's old news. Don't really care too much about what happened. And as you can see, the stock market just sort of kind of shrugged it off. There was a kind of a pop higher, not really a big deal there. The S&P 500 looked like it wanted to get kind of ugly right around, which would be about 1:30 New York time. Here in Mountain Time, it's about 11:30 my time if you look at the clock down below. But then everything just sort of took off running. Here's a look at SPY stock versus QQQ. And as you can see, yesterday's big sell-off, we've recovered a little more than 50% of that. A lot of the move in the recovery happened pre-market this morning, moving upward. A lot of individuals just sort of buying on the dip. Here's the thing. Nothing occurred yesterday. A little bit of selling came in, triggered some stop losses, turned into an avalanche. Big sell-off. 1.5% on the S&P 500 for yesterday. Given that, a lot of people stepped in, bought on the dips. There was no reason to sell, so why is it going lower? Let's buy these dips. They pulled that trade off quite nicely. The VIX, I had wanted to get in and sell some calls on the VIX going into either next week or the week after. Missed that opportunity. Did have some, I did put some orders in. They didn't get filled. Simple enough. Maybe the VIX pops to 15 if we see something in economic data tomorrow morning that could spell some ugliness. We shall see. So maybe I didn't want to get in on that trade. I'll take a look at that tomorrow morning when I wake up and take a look at that. But nonetheless, the VIX, you can see the big spike there. The VIX has really kind of mellowed out to flatline. Put call ratio. I read some messages on the put call ratio yesterday, and I'll look at this from time to time, especially when I'm trading, especially the VIX. I'm trying to understand, okay, who's buying what does the market think, this, that, the other thing. If you look at this line, the put call ratio is exactly that. How many puts versus how many calls are being purchased. And we are sub 1. This is indices and equities. You can see that in the very top left corner. PCC is the symbol on trading view if you wanted to take a look at that. It's really kind of sort of right in the middle. The blurbs that I read said that this was popping higher, and I look at the historical numbers and I was like, to whom is it popping higher? No one's really getting in. It's almost Christmas. No one's really making moves. That's why today's move to kind of move back upward makes sense. U.S. Treasury yield dipped a little bit more, kind of moving right back upward. Yesterday we saw a flight to quality, meaning everybody sort of rushed out of equities, bought bonds for security. Now those trades are flipping backwards. They're selling off those bonds. Yields are moving back upward. That's what happened there. In the meantime, stocks went back upward. U.S. dollar index looks like it's teetering on a cliffside. As this is actually good news for equities, because what's happening is as the U.S. Treasury yield moves lower, anybody who's in the carry trade, borrowing in one country and putting it into the United States to take advantage of the differential between what they borrow and what they can get out of in the United States, that interest rate differential, that trade's falling apart. You can see that happened back on the 13th, 14th of December. So what goes on here is as the dollar index falls more and more, international companies repatriating funds here into the United States, they're doing so at a lower exchange rate. Companies are going to be more profitable. Not bad. Oil, sort of stuck in the middle, kind of looking like there may be some more geopolitical concerns. Now we're talking about Yemen. Will it ever end? I expect oil to kind of start trickling a little bit higher because supply and demand issues. OPEC will step in and cut supply, hoping to prop up price. Moving forward, if the economy continues to move forward, mind you, we just got the continuing claims and initial claims. If the economy does not slow down, demand picks back up, and if OPEC cuts production, then price will go much higher. Spot gold. Now that interest rates are starting to ease a little bit, spot gold looks like, and if you take a look at this chart, looks like it wants to take off. We'll see how that plays out. I'm going to keep an eye on spot gold. I don't really trade gold as much. From time to time, I will get in on that one. I'm a huge silver bug for those who followed me for any length. Nonetheless, make sure to hit that like and follow button if you want to keep up with the stock market review. I break down the economy, economic data, and how that affected the stock market, give you kind of a broader view as to what's going on. Hit that like and follow button. See you in the next video.